Welcome back. U.S.-China trade hanging in the balance on Sunday morning futures yesterday. I spoke with National Security Advisor Ambassador John Bolton about how enforcement in a deal is critical. What is the enforcement action that could be possible here to make sure that Beijing follows up with these promises?
There are going to be more talks next week. Certainly at the highest levels of the government, we're working as hard as we can to pursue the president's agenda.
Would you put tariffs back in place if they fail to comply?
That would be that would be a possibility. That's one way of doing it. That's one of the options that's out there. And that's one of the reasons, honestly, look, I'm a free trader, but one of the reasons the president, I think, was right in imposing tariffs on China was that it got their attention. And I think that's been all to the good.
Now, growing skepticism on the president's trade policies weighing on global businesses. According to a Fidelity International survey, the research finds that 45% of Fidelity's analysts believe trade policies are the cause of any business gloom out there. That's up from last year's 13%. Joining us right now is Path Trading Partners chief market strategist and InTrades.com head of research and principal, Bob Iaccino. Bob, it's good to have you on the program this morning. And you agree that this China deal is important for markets. You're looking at copper as an indicator of where we are.
Yeah, as the trade deal sort of became both sides talking positively about it, you saw this run for copper. It was about 7 weeks in a row where we were basically straight up. And copper not only being an important part of China's economy, but it's used as currency when they're really up there with that 8, 9, 10% growth. They will actually trade copper as well as trading the currency and other things. So it becomes kind of a canary in the coal mine for how the deal is going.
Right, because copper is an economic indicator. It goes in everything from making cars to your home to telecom. John?
So I want to ask you about scenarios. So walk us through what happens in the copper market or any other market for that matter if a deal gets done in the next few weeks versus what happens if it doesn't get done. What's priced in right now?
Well, priced in is a deal, that's for sure. I mean, where copper has gone over, say, the last 10 weeks, it's been down 2 of the last 3, but it's been a very strong run off the lows. The lows came when you saw that sort of I don't want to call it a false story, but whatever it was where supposedly the talks were canceled, and then Larry Kudlow came out and denied that the talks were canceled. That's where copper made its low. So since then, there's been sort of a coordinated effort between the U.S. and China to speak mostly positively about how the trade talks are going. That's when copper took off. So when I see copper kind of slow down, it's almost as if there's radio silence between the two governments.
How vulnerable are these markets if a deal doesn't get done? Do we see a big sell-off, or is it just a modest move?
You know, what's interesting? To me, the geopolitical disaster of no deal has been priced in. So, in other words, there's going to be a deal in the market's opinion. The last few days, what we've seen in the S&P, for example, is a sell-off where we had 70% of companies who reported guidance last earnings season report negative guidance. Now, it wasn't all the companies, but it was about 99 S&P 500 companies. I think they need to get that deal sooner rather than later in order for analysts and companies to be able to ratchet their forward guidance back up. And I think that's the fact.
Bob, in addition to the China news, this is the other big question for markets, right? What's going to happen to the economy given the weakness in Europe and the slowdown in China?
Yeah, I really like Jay Powell, and I think what he just said is a lot of what you guys have been saying all morning. He basically said the economy in the U.S. is strong. It could be stronger with a China deal. It's going to stay strong even without. The length of time it takes to get the deal done, I think that was his way of commenting on that. We're going to see slower growth, but there's going to be growth. U.S. is doing very, very well. The jobs numbers, to me, were great. Take that headline miss out. Everything behind the headline miss was really, really strong. I was really positive about the jobs number.
Positive. It was only 20,000 jobs.
Yeah, but when you look at the 12,000 ratchet up of the last 2 months, when you look at the wages, when you looked at labor force participation rate was steady with the unemployment rate dropping. Everything behind that headline number was really good, which led me to believe that 20,000 number was more about companies not finding the people they wanted to hire rather than not wanting to hire them.
We're going to have an important indicator this morning at 8:30 when retail sales data come out. We had a really bad retail sales number out a month ago. What are you expecting to find out today?
Well, I think there's going to be big revisions on that retail sales number. You look at the earnings of some of the retail companies that we've seen. Everyone seemed to do better. Now, in terms of that holiday sales number, I'm not sure where that came from. I'd be really disappointed if we didn't get revisions of that number in the new release.
A lot of people questioned it.
Right. Yeah, it just seems strange. I mean, you saw a lot of positive comments out of the companies
Kelly asked,
outside of Black
Powell
Friday.
about it last night in that interview, by the way. It was interesting. I'm dying to hear what John thinks, as we move on, what you thought about that interview, because it was unprecedented for him to go out, I think, in a time of great growth and not a crisis, and do an interview on 60 Minutes.
Maybe a subtle message to President Trump in that interview that he's got a voice too.
Mm-hmm. So in the face of all of this, do you want to put new money to work in this market then? It sounds like you're fairly bullish.
It's kind of funny. We're underinvested, and we have been all year. And part of that reason is because we don't have a deal. And even though I think there's going to be a deal, I'm not at the table signing it. So until that actually happens, I'd rather play catch up with the market. We buy discounted companies when we buy companies, so I'd rather continue to use that plan. And when we get a deal in place, then we just play catch up and get some good companies.
And on commodities?
Commodities, yes, we are long. We're long copper, we're long crude oil. Those are the kind of things we look for. We think that the U.S. is enough to at least keep these stable.
Bob, it's great to have you on the program.
It's good to be here.
Thanks so much. Bob Iaccino joining us there.